Hey everyone, it's Julian Marchese. It's been a while since I made a video, so I thought I might as well just make a quick update on what I think of the markets currently, and what's going on with me. Right now I don't got my charts up. I'm on a different computer, so I'm just gonna be using free stock charts. Might as well just give an outline for you guys right now. You can see I got Windows 7, so this is a new computer. I still got all my other stuff on my old computer, and I'm in the process of switching over. But basically, yeah, I'm going to give a little outline of what I think of the market's more of a longer term view, short mid-term view, not really intraday. I'll go into that as well, however. And I'm going to also give you guys a little update on what's happening tomorrow, Wednesday, October 26, 2011. So obviously, if you're watching this past that date, hopefully I'll have this certain video up by that time. Um, but first of all, let's go into the market. So right here, what you're seeing is the SPY, and if you do recall, back in August we had quite a nice drop off of fears in Europe and off of the U.S. debt downgrade by S&P. And I was watching the markets during that time. And trading it, and wow, what a ride it was. There were a few days after the downgrade, and even before the downgrade a bit, where we had volatility that in the S&P mini that I haven't seen since 2008 and the flash crash. Like we had some 90 points days, and I remember after the FOMC day, after FOMC, we saw like a 70-point rally into the close, and it was just insane to trade that. A few studies have been done on the S&P's liquidity, and 2000, and they found that a 2000 contract block sell order at market in the ES at some points during the day would have wiped out the entire bid side book. It was that bad at some point. So there was quite a bit of fear and uncertainty in the market, and I think that's why we've seen such a drop. But now we're starting to rally back. Even though today we were down 200 points on the Dow, it didn't feel like that. We aren't seeing the intense amount of volatility we had back in August, and even in some parts in September. But this is still pretty good volatility to trade on. So I think there's lots of opportunities. Basically, I'm going to show you. You got the 50-day moving average in blue on this chart, and the 200-day in red. You could see the drop came out of that 200-day. Once we broke that, we saw insane amount of volume come in, and we dropped hard and quick. I personally think we are in a longer-term bear. Well, longer term for me is in the next couple of months. I think we're going to continue lower, and the reason for that is the breakdown we saw in August was very damaging, and usually in a lot of bear markets we see these types of bounces, these huge 20% bounces in less than a month, for example. If Here's some statistics. If we continued on this angle higher, for the next month we'd be at 52-week highs. For the next, if we did that for the next like month and a half, we'd be at all-time highs in the S&P. So this rally is definitely unsustainable. I think we may see a little bit more of a push, even one more or two more days, but I think we have a very good bearish opportunity, especially at these levels here in the 27, 28, 26 level, where we broke down from. These are definitely some good areas to potentially take some trades in, and I think for the longer term, we should see a return lower. And the reason for that is really basically, I don't think we've found a solid resolution to the European crisis. I believe this bounce has been off of a potential resolution. So now that the bounce is over, if there is any more fears coming back again, and today we did see some of that, we could just return lower very quickly. So yeah, basically SPY, that's what I got on there. On the QQQs, once again, we have rallied basically up to previous resistance. Very nice on the in the tech sector, but we're starting to get some earnings that have been pretty poor out of Apple computers. I wouldn't call it poor, but it wasn't as expected. Amazon today wasn't very good. We dropped a good 20% I think on Amazon, and look at Netflix. These momentum stocks are getting destroyed. Apple's holding up pretty well, even considering their earnings. And Amazon, I believe their traded price was like at 200, so we're breaking down to that 200. So I think the Nasdaq still got maybe once again another push up to these areas. Bottom line is, look how quick we bounced up, all the way from these lows to basically almost 52 week highs. So we could return very quickly down. That's all I'm saying. I think there's a potential that we will see a quick move down. But I think in the long run, especially looking at like small cap stocks, you can see how low they are right now. Looking at for example, the Canadian stock market. The reason I look at this is it gives me a good gauge between equities and oil merged together. That's basically what the Canadian stock market is. You can see it's very technically broken, and you could say that Canada is much better off than the U.S. Economic wise, but look how the Canadian stock market is doing in comparison to the U.S. And look at markets like Italy, obviously getting destroyed, Germany also getting destroyed. This looks like a normal bounce in a downtrend. So only thing that might scare you getting short is this Nasdaq. So if we get below the 200-day in the Nasdaq, I think we'll see another rotation lower. Okay, next thing I'll go over is basically what I'm doing in my trading. Basically, the direction I've taken is more of like a diversified approach, and I think it's really been the best performing for me so far. About 80% of my trading, 75-80% give or take, is now more so swing trading. And basically what I do is I do this type of analysis, very basic analysis, and I go from a top-down approach. I look at what the economy is doing, etc., and I drill down into specific markets. I don't really go into specific stocks, I just go to specific futures and ETFs. And I'll trade basically my feel on that. And it's a discretionary approach. It's been working for me basically all summer. I did a few tests over the summer which have proven well with this strategy, and I've been implementing it since September, even during my school time. The other 20, well actually the other 15% is my day trading, so I'll do that from 3 to 4. Obviously in the summer I was more heavier day trading as I was refining my swing trading, and I've already been doing day trading for quite a while, so I'd say I'm pretty good at it. But given the time frame and the time limitations I have, I restrict myself to only about 15% day trading, or risk in day trading, as I only got 3 to 4 to trade. And it's obviously more stressful than swing trading, no doubt. Even if you're making money, it's much less stressful swing trading. So I plan to keep it in the 15 to 25% range. I love day trading, that's why I do it, and I've performed well in it, so I might as well continue doing it for a small risk. Then the other 10%, and obviously that's only like my time focused on it, but I also I do have quite a bit of equity in it, or money in it, is my automated strategies. And basically I've been testing a few automated strategies on NinjaTrader, and I've been writing my own through Excel as well. I've been getting into that type of stuff. And basically what this enables me to do is I have all these different strategies. I also incorporate a longer term, buy and hold type strategy, but it doesn't really have much of a short-term effect on my account. And all these strategies allow me to be hedged in the sense where if I make money in my discretionary day trading and I lose money on my swing trading, and I make money on my automated, I'm balanced out. So it gives me a smoother equity curve as long as I have statistical proven reliability on my strategies. Now that I've gotten into automated trading, I'll go into my little announcement. There is a show in Canada called Dragon's Den, and basically it's a show where people pitch their ideas to these five wealthy dragons. They're called. They're basically investors, and if you if you convince them, they can invest a portion of their funds into the potential investor, and you basically are giving away a percentage of your company. And I went on the show, I auditioned, I was accepted, and I actually went in front of the Dragons, and I pitched all I'm going to get into. I'll leave the suspense for the people watching this today, but I basically pitched a automated strategy to them, and the outcome, I'll wait for you guys to see it tomorrow. But yeah, I went on the show. I pitched my this automated strategy investment idea. And for people in the U.S., by the way, the equivalent to this show is Shark Tank. So check that show out too if you're not familiar. There's plenty of videos on YouTube. And yeah, hopefully when that's all done, I'll post the video up as well on YouTube. And I'm going to, and basically the company I pitched them, because you have to have like a company name, is i4me.com, and I'll just go on to it. It basically just redirects to my blog, so I'm probably going to make a post tonight. I haven't really updated this blog lately, but I'm definitely going to make a post tonight to have all my contact information for people who want to contact me after seeing the show, for example. So I'm going to start, hopefully I'm going to start doing this teenage stock trader Julian.blogspot.com. I'm gonna start adding again. I've been busy over the last few months, so please understand. If I haven't been really updating lately, it hasn't been on my top priorities. But yeah, just going to let you guys know. So check out Dragons Den. I'll show you their website right here. And yeah, check it out. I'll be on tomorrow on CBC at 8 o'clock Eastern Standard Time. They do a few repeats after that as well. So yeah, check it out. That's my little update on what I'm doing right now in the stock market and in my personal life. Obviously trading related. And yeah, I hope to make more videos in the future, and hopefully I could get up once again an educational site. That I've been planning to do this. I want to do this. It's also some good side income that I could probably do. And let me know in the comments if you're up to that. I know I made a video about market updates. I've put that on a hold again because of everything that's really going on with me right now. It's been pretty hectic, pretty busy. Start with high school as well. So yeah, I've been dragging this on a little long. So yeah, you guys check everything out. I hope to be updating my channel a lot more now, and I also hope to be making more educational videos and updating my blog more. Thanks, guys. So yeah, check Dragon's Den out. I'll probably post a video soon. Thanks again.